Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. So we're down to the wire, 2019. Only 2 weeks left after this past week, and as we kind of get into the holidays, things will slow down a bit from a trading perspective. Also from like a scheduled news perspective, kind of like it's kind of been like a crazy December and all sorts of like economic and China trade headlines. But in terms of like earnings, things will start to slow down a bit, and then pick back up right at the beginning of January. So you'll see, like after I go through the earnings this coming week, that don't have like a ton of names, but there are a couple big names. So Monday before the open, actually nothing scheduled. Monday after the close, really nothing of interest. Tuesday before the open, JBL. Pricing in about 3 points. Broke out of a long range in October on earnings. Excuse me, in September on earnings, and just been powering higher. Stock looks fantastic. Only problem is I feel like it's up a lot and it's right on its high, so I feel like expectations might be a little bit too high. But maybe if it can pull back ahead of numbers, maybe look at some sort of bullish strategy because it really does look good. Last quarter, actually, the last couple quarters were good, and just the sector still is pretty strong. So maybe if it pulls back a bit, it seems like it's a little overheated right now. If it pulls back, maybe take a shot, some sort of bullish strategy. After the close Tuesday, a big name, FedEx, like 10 and a quarter, give or take, is about what's priced in here. So last quarter it was awful. Stock got smacked, and it's recovered most of it, not all of it. You can see it's right at the 200 edge, just hanging out, and it seems like it has a decent recipe to be volatile again. I'd say options are on the higher side of its average, but it did move about 25 points in September, so I feel like it could kind of go either way. So maybe like a volatility strategy just could be like a nice way to approach this. I feel like it's one of the more interesting names of the week. Definitely. It is a big name, but also one of the more interesting names. All right. After, excuse me, Wednesday before the open, Journal Mills. So 225 or so. Staples been pretty quiet recently. This one's been kind of stuck sideways for a while, and honestly, like it seems like it would probably need like a really clean beat or maybe like a clean miss to really get that big move, just because like action in the staples has really dried up. So I guess I'm kind of on the fence. I've traded this occasionally in the past. This quarter, I guess I'm a little bit less interested. After the close, Wednesday, another big one, Micron. So 425 is what's priced in here. Definitely one of the big names like FedEx. Had a really nice run the last few days, and it's right at its best level of 2019. If I go back further, though, you can see that there's still quite a bit of room to make back the high from last year. So kind of a big level. Um, the thing I'll say with Micron though is that earnings seem more like a crapshoot on this because it seems like the reaction a lot of times is determined by like the overall sentiment in like the sector or in that particular space. Last quarter was pounded, but obviously it's recovered all of that and rallied. And right now, action in the semis is so strong. Western Digital got hit on earnings. Pure Storage got hit on earnings though. So I feel like I like the bullish potential longer term, but after like this really sharp move just over the last few days, it might be a little bit tougher. So I mean, they don't report until Wednesday after the close, so that's 3 sessions. You can see how it acts ahead of that. But I'm thinking maybe some sort of calendar spread, some longer term bullish strategy. Maybe saying like maybe this quarter not so volatile, but the chart looks pretty good. Seems like it might want to work its way higher, especially if the chips remain strong. All right, Thursday before the open, Carnival, 275. It's priced in here. It worked pretty well as a bearish trade back in September, but it's recovered all of those losses. I don't think the setup is very compelling right now. And even though the options only priced in about 275, it doesn't seem like a very like interesting setup one way or the other. Maybe there's a little bit of room. I mean, there have been some. You can see here there have been some bigger moves in excess of 3 to 4 points. So 275, not too bad, but I just like the setup doesn't look too good. Darden's, a restaurant stock, 675. It's priced in here. Volatility definitely a little bit higher on the restaurant stocks as a whole this past quarter, and I kind of think this is like an interesting little setup going into earnings. I haven't had a whole lot of success with Darden recently, but it's kind of sandwiched in between the high, which is up in like the mid 120s, and then like recent low down around like high like single digits, so like 108, 107. So kind of like sandwiched right in between. Um, it looks like it might have 8 to 10 points either way. So I feel like I feel like there's some potential there, and it's priced in 675. So might look at a volatility strategy on that one. Nike. So 4.5 points was priced on Nike. Definitely one of the biggest names of the week. Had a very solid quarter in September and has mostly held on to the gains. Kind of not screaming higher, but kind of steadily building. Expectations I think are higher at this point, and like Lulu, which just reported this past week, good news might be kind of priced in. So it would be better, in my opinion, if there was like a pullback a bit prior to numbers, just kind of wash out the expectations a little bit. But if the results are solid, maybe you see a smaller move, or maybe not much of a move at all, but maybe you see a continuation of like the bullish action through the holidays. So again, maybe like a calendar spread, or a call fly, or some sort of longer term bull position, thinking if the numbers are good, maybe it just keeps grinding up through like the holiday season. And then Friday before the open too. So BlackBerry, ugly chart, and it got hit pretty hard last quarter. It's priced in 70 cents this time around. Down here, I feel like it's a little bit of a different setup than it was last quarter. But, to me, it doesn't seem like a stretch to see maybe like a point either way. It's only priced in 70 cents, so maybe the options leave a little room. And then last but not least, CarMax. So 675, it's what's priced in on CarMax. Um, you know, this one to me seems like the options are kind of expensive. Same story as last quarter, where stock looks pretty bullish, but options seem kind of expensive, and overall the volatility has been a little bit lower on this. So I just pricing in a big move around earnings just doesn't make much sense to me. So I think I'm going to avoid. If I had to, if I had to take a position, and I don't think as of right now I would, but maybe lean bullish just because the chart looks good. The numbers have been pretty solid, but I'm just not sure if the options leave a lot of room to make money on it. All right. So not a whole ton of earnings, but some interesting earnings, right? And that's kind of be like the thing you'll notice now through January, the beginning of January, is that not a ton of names, but there are a few that are pretty interesting. All right. So if you like these videos and you're looking for more information on options education, or maybe more trade ideas, options trading ideas, please follow up for more information on options in play. All right. Hope you guys have a fantastic weekend, and I'll talk to you on Monday.